Hello, everyone, and welcome to today's webinar, IRS Enforcement in the Era of COVID. My name is Mike Vanoy. I'm the head of marketing and product at Assure. And I want to welcome our very special guest today, Eric Green. Eric is a partner, the managing partner in a firm, Green and Slarts LLC. They're a boutique tax firm, offices in Connecticut, in New York. Boy, Eric's credentials are too long to list today, but a couple notables. He's the author of An Accountant's Guide to IRS Collection, The Accountant's Guide to Resolving Tax Debts, and The Accountant's Guide to Resolving Payroll Tax Debts. He's a contributing author for Advocating for Low-Income Taxpayers, a Clinical Studies Casebook, 3rd edition. He's also been quoted in USA Today, Consumer Reports, The Wall Street Journal, MarketWatch, TheStreet.com, Wall Street Journal, and CreditCard.com, as well as seen on these publications on your screen. Eric is also was also the 2010 Nolan Fellow of the American Bar Association, and he served as chair of the American Bar Association's closely held Business Tax Committee. He's also a past chair of the Executive Committee on Connecticut Bar Association's tax section. So I think we're probably not going to find a more qualified person on this topic. And this is not a fun topic, is it, Eric? We're talking about potential collection in the enforcement from the IRS for penalty to pay taxes. Presumably, no Assure client is in this boat because we're doing the taxes for them. But in the era of COVID, this has really turned into a real problem. Before we kind of jump in, Eric, you want to kind of help frame the conversation about how this has changed so much in this era?
Well, look, I mean, yeah, no, and listen, by the way, Mike, thanks for having me on. All right, I appreciate being here. So look, I'm going to tell you. You said, this is a real problem. Out of every problem, each problem creates an opportunity. Okay, so is it a problem for clients? Absolutely. Is it an opportunity for the accountants who are listening to this? Absolutely. I mean, 2021 is going to be a good year for those of us who represent taxpayers, but coronavirus, there are a couple things going on. Even prior to coronavirus arriving in this country, you had 25 million taxpayers who were in trouble, 10 million non-filers that had been identified, and 15 million that were already in collection. So the government was already ramping up. Now, what coronavirus has done is obviously thrown monkey wrenches into everything, because taxpayers who may have been kind of, skirting the line as far as being viable, many of them have really taken a terrible hit. Families are suffering. I think 37% of taxpayers were unable to pay their 19 taxes. So that 15 million in collection inventory may be as high as 50 million right now. And so the government, and we're going to get into this, the government is facing a kind of sticky situation, which is, on the one hand, people are hurting, but on the flip side, you have to enforce. All right. And what we're going to see I think we're going to see you're going to see a real tidal wave of enforcement. And again, we'll get into this a little bit later, why I think the timing, but I'm thinking end of summer. And for those accountants who represent taxpayers, and I can talk about this, what we're doing in our practice, we're automating. I mean, we're automating everything that can be automated, because we are going to see a wave of work. We're staffing up. And so there's an opportunity here to help taxpayers, help them get through this, because the IRS has and I know, Mike, we're going to get into a lot of this. There's lots of options to help people. The biggest issue is taxpayers need to want to resolve this. A lot of them that take the ostrich approach, which is, hide and just hope it goes away, they're going to have problems. They're going to get levied, liens will be filed, but there's an opportunity to go in right now and get this resolved in a way that you don't have to worry about enforcement being taken against you.
Yeah, I think that's a good segue, and I think the ostrich comment is right. So, knowing on the call today, we've got CPAs, banks, brokers, and largely entrepreneurs, owners and managers of small and mid-sized businesses. And so I think, not a waving of the finger, but people have been in survival mode for about a year now, right? And
Mhm.
when you're speeding down the road and nobody pulls you over for the last year, you might think, yeah, maybe they don't enforce the speed limit on this road. Well, enforcement is coming, right? Hopefully it's going to get people prepared. If not, at least that's really the purpose of today's conversation, is to help our clients, help small businesses who are not our clients, just to understand the context of here, so that they can be prepared for. Hopefully they're not in a bad situation, but at least they're going to be at least knowledgeable, if not financially informed and prepared for enforcement. So let's jump into our first topic. I think we broke this conversation up into 4 big buckets here. The first of which is, what have been the actual changes on enforcement due to COVID?
Yeah, well, so to give everyone who doesn't live in this world a little bit of what the landscape looks like. So when COVID starts, about the same time is when the TIGTA report came out. Now, TIGTA is the Treasury Inspector General for Tax Administration. They're the group that oversees the IRS. And in May of 2020, they have a report that comes out that says, hey, there are 10 million non-filers, IRS, that you already know about. Why are you not going after these people? And Chuck Rettig, our commissioner, said, oh, no, we're going after them. All right. But the thought was, we can't just start levying people in the midst of this. In essence, we are going to bring more misery on the shoulders of the miserable, right? So what does the government do? They roll out sort of their game plan, right? And if you're interested, you can Google this. It's IR 2020-248, all right? And it's the IRS's sort of guidance for what are they going to do while this coronavirus sort of pandemic is going on. Well, I'll boil it down, then we'll go through the details of it. Boiled down, it's very simple. If you're willing to pay, we're going to make it easier to pay, right? But what they did not do, and I get this question all the time, is, well, have they made it easier to get an offer? Have they made it? No, they haven't, all right? They're not making it easier to write stuff off. What they're making it easier is, if you want to resolve this, we're going to make it as simple as possible. Now, on the one hand, it's helpful to taxpayers. On the other hand, it helps them, because let's be honest, they weren't even getting to the 15 million. If that number suddenly becomes 35 million, they don't have the people to do that. I mean, many of these changes help the IRS. The offer and compromise program helps the IRS. I mean, these, I know they help taxpayers. There's a benefit to the government as well, right? So what are the changes that they make? Well, first and foremost, all right, if you are already in an existing installment agreement, right? We throw around the slang IA, right, in geek language. But if you're already in an existing installment agreement and you had a 2019 balance, normally what happens is, if you incur a new balance, you have just defaulted on your agreement. When you sign into one of these agreements, what the IRS says is, we're willing to not take enforcement. We're not going to levy you. We will let you pay this back, monthly over however much time. You're going to agree that you're going to maintain your compliance. So for those of you who are CPAs or EAs and listening to this, and I talk about the opportunity to help people, much of this is really driven by a formula, right? Whether if you read my books or you join Tax Rep Network, which is our coaching program, what we're effectively teaching you is, here's how the formula works, and here are the opportunities, right? Offers and compromise are a formula, right? There's nothing magical to them. Now, there are rules to understand, absolutely. So normally, when you get into an agreement, whether it's an offer or an installment agreement, you agree to maintain tax compliance, right? That means you pay your current taxes and you do not get penalized going forward. So you You pay taxes the way you're supposed to, you file on time, and it's basically you be good and we'll let you pay over time. Well, when 19 comes along, right, because many Americans are living so razor thin as far as their income and expenses that they literally are paying, like they're going to pay last year's taxes with this year's dollars. Well, what happened is now coronavirus shows up. People lose jobs, business plummets, right? If you own a restaurant or a pub or anywhere where the public has to gather, you may even be shut down. Revenues go down 90%. All of a sudden, you don't have the money. So now you're not paying 19. What the IRS said is, we're just going to roll 19 in. All right, don't worry about it. Don't call us. We're not going to make you fill in new financials. We're not going to default you. Again, helpful to taxpayers, but it would be a nightmare for the IRS if they went and defaulted. I think it's like 18 million installment agreements.
Hey, Eric, I
Yep.
want to start with a question. So, you know, most of our audience is entrepreneurs or small business owners, you know, and everybody knows the painful stats. 50% of all small businesses fail within 5 years, 70% within 10. It's a bunch of entrepreneurial risk takers out there, right?
Yep.
So because of that, regretfully, many people understand what the IA program even is. For those who are either early days or they've had good sailing up to this point, what can you just describe back up even what is an installment agreement? How do you even enter into one? Does it just happen to you when you does it if you simply don't pay, do you enter into it? Is this something you have to proactively negotiate? What does that look like?
All right. Well, it helps if we cover sort of the collection process. But for those of you who are entrepreneurs, let me just, I'm going to give you my advice. If money gets tight, you pay the sales tax and you pay the payroll tax. Everything else can be discharged in bankruptcy, the business can be shut down, but sales tax and payroll tax will follow you personally out of the failed business if it fails, and potentially destroy the rest of your assets because you are personally on the hook for those taxes. Those are what we call a trust tax, right? And by the way, that's why I have this relationship with Assure, because that's where I send my clients, because I'll give you an example. If I deal with my local accountant, and let's just say he passes away, and he doesn't pay over the payroll taxes, I'm personally on the hook for that. The fact that he passed away or stole the money or whatever, I might be able to get out of penalties, but I'm going to owe that. So first and foremost, always pay the sales tax and payroll tax and deal with an upstanding payroll operation, because when this goes bad, and trust me, we do a lot of criminal work. When this goes bad, when the bookkeeper embezzles, when the payroll company vanishes overnight, like First Priority Pay, they all went to prison in New Jersey a number of years ago. When this goes bad, it goes bad. All right. So first and foremost, as an entrepreneur, those two taxes you have got to become militant about. That is the best thing if you want to stay in business and not ruin your own personal finances beyond what you've invested. Now, what happens is if you are unable to make payments, whether it's income tax, if it's the business on the payroll tax, a demand for payment, the returns get filed, they have to get filed, and a demand for payment comes out. Once the demand for payment comes out, you have to actively contact the government to enter into a payment arrangement. It's what we call an installment agreement. It's look, I can't pay you all right now. I would like to pay over time. Now, the way the IRS works is there are two real options here. Now, and I'm going to get to that first bullet point because they've really made it easier because of coronavirus. But what happened prior to coronavirus, here's the deal. If you owed $50,000 or less and could full pay within 72 months, you didn't have to disclose any financials. You didn't have to submit your financial statements, your bank statements, any of that. You didn't have to disclose your personal assets. You just simply made a phone call and set up the agreement and you were done. That has been increased now because of coronavirus. Now think about it, from 50,000 at 72 months It's now $250,000 over the time remaining on the 10-year collection statute. And yes, the IRS does have a 10-year collection statute. So they've made it much simpler to just make a phone call and just set up the agreement over the phone or even go online. So if you owe $250,000 or less, and you can full pay within 10 years or whatever time is left on the statute, you're good. If you can't afford that, or you owe a balance that is beyond that, you can still get into a payment arrangement. You'd have to submit a financial statement. It's a form 433, and you back up everything: 3 months of bank statements, your profit and loss, or proof of your income, your proof of your housing, your this, your that, whatever. And these packages, 2-3 inches thick, will go into the government to be reviewed, and they will set up a payment arrangement based on your ability to pay. The other thing is there's something called uncollectible, okay? And what that means is the taxpayer submits their financials and shows that after they pay their allowable living expenses, they don't have the means to make payments against the back taxes. The government will make you uncollectible. So when I talk about, there's an opportunity to get in and just deal with the problem, don't take the ostrich approach. This is what I mean, is there's lots of options for people that are in trouble, but you need to want to be helped. This is like an internal joke we have here, Mike, where, I can lead you to water. I can't make you drink. If you don't want to be helped, I can't help you. But the IRS, after they levy you, they clean out the bank accounts, they garnish your wages, they levy your vendors. All of that, by the way, isn't to be mean, isn't to be sadistic. It's to get the taxpayer to pick up the phone and deal with the problem. That's what they want. They want you to pick up the phone and deal with the problem.
Yeah, I mean, just my conversations with entrepreneurs and growing up in an entrepreneurial family, my experience is that they're never gonna not want their money, but it's amazing how much the mean government will work with you if you are proactive in your communication. But if you ostrich up, expect there to be a very shocking day when you can't use your debit card, right?
Yeah. Oh, and listen, by the way, the advice to entrepreneurs about pay sales tax and withholding tax. Here's the other thing I'm going to tell you, and Mike, we're going to get into this in the next bucket, but everyone's afraid of the IRS. Can I tell you something? Screw the IRS. Fear the state. The states are much more aggressive. They have much less taxpayer protections. They can pull your sales tax permit in a heartbeat. In Mass and New York, they can pull your driver's licenses. All right. The state is actually the people to fear the most beyond the IRS. You should have a healthy fear of the IRS. But if when I have clients that come in who are not filers, or they have a limited amount of funds, we will file the state first. I will throw whatever we have at the state first, because that is where, if there's going to be a problem, it's going to be with the state. The IRS has programs out the yin yang. They have a very good taxpayer advocate. There's audit reconsideration, doubt as to liability offers. There's all kinds of things you can do with the IRS. The states don't have most of that, and they don't care. They have programs, but they're much more chaotic and much less formula driven. And so planning and dealing with them is much more difficult.
States can't print money, and they get federally funded, unfunded mandates that they get put in hard positions too, right? So right. I will make it clear, it is not Assure's position to publicly say, quote unquote, screw the IRS. But
no, Eric Green said that. I will own it, Mike. I'm going to own it, all right? And I'm sorry, I don't want to offend anyone, but no. I literally, by the way, I actually said this at AICPA's Engage conference, but I didn't say screw. I used the F word. I said, fuck the IRS, fear the state, all right? And we got a big laugh. Someone complained, but I got a big laugh. But what I'm saying is, what happens is people will come in, like the entrepreneur comes in and says, yeah, no, we filed everything with the IRS, and we'll sit here going, oh, no, all right. What about Mass? What about Florida? What about Connecticut? Whatever the state is. I'm like, oh, yeah, no, we haven't dealt with them yet. Oh, good Lord. Now they're behind the IRS, but here's what's going to happen. The state's going to tell you, we don't care if the IRS is, in priority over us, pay us, or we'll pull your sales tax permit. So now you have the entrepreneur, the restaurateur, the contractor, whomever, who's now has the IRS legitimately saying our lien's in priority. We get paid first, the state can wait. And on the other hand, the state says, we don't care, pay us or we're putting you out of business.
That's right. That's right.
And it really causes hardship. If you end up in that position, here's what I would suggest. Prepare returns. Do not file them until you've talked to a professional who can help you sort out a strategy, right? In essence, you know what, Mike? It's very similar to an entrepreneur. You know, in here, I'll tell you my take on this. And I've started multiple companies. We have a booming law firm. I have a booming, huge coaching program and online community. The podcast is getting 7,000 downloads a month. Here's what I'm going to tell you. You can go anywhere you want. Here are the two questions you need to ask. Where do you want to go? And what price are you willing to pay? No one gets there without a plan, all right? That's not different here. So when clients call, okay, let's lay it all on the table and let's figure out how are we resolving this? And that will lay out for us what our game plan is. If you just knee-jerk go throw stuff in, what we're left with in our office is trying to sort through the mess and do whatever we can to help. But a lot of opportunities get lost that way.
Yeah, got it. All right, I'm looking at the clock. I'm going to move us to our next bucket here. It's obviously related, but this is the actual enforcement status. And it's interesting, as you and I spoke a couple of weeks ago on this topic, about how the IRS is thinking and trying to be somewhat proactive here as they anticipate stimulus money and what the impact could be. And certainly there's potential for personal, but you know, I think in the business world, the entrepreneurs world, you know, PPP funds specifically, right? And speak to that.
So, and we can deal with this bucket fairly quickly because here's, and if you do happen to listen to the podcast, you're going to hear this because I have the IRS executives on. They're not taking levy action in any mass scale right now. And the reason is because of the stimulus money. The IRS cannot levy stimulus money. So for instance, if the government, before I had him on, the deputy commissioner for Small Business Self-Employed Division, I had texted Darren Gio. I texted Darren and said, when's the hammer going to fall? You know, I got 4 kids to put through college. I got 23 people here at the firm to keep busy. When's the hammer going to fall? So he texted back. He said, when do you want the hammer to fall? I said, how about Monday after the podcast? He said, I can assure you it will not be Monday. But what he told us is, look, we can't issue 1.3 million levies, all right, on people on a Monday because we're going to get bombarded with phone calls. The advocate will get overrun. The low-income clinics will get overrun, and we're going to have to release 900,000 of them. So what they're doing is they're saying, look, the second round of stimulus money is working its way through now. The third round is supposed to be, it looks like they're going to have the bill to President Biden by around March 14th or 15th. Assuming that gets signed, the IRS has done a very effective job of getting this money out. There are problems, certain people have had issues, but on a global scale, they've got like 97% success and accuracy. That's huge, given the job they have to do. That's going to happen. So I'm figuring if you do the math, April, May, even trailing in through June. July, final notices of threat to levy will have to go out. They've been holding that off. 45 days later, now we're at the end of August, like around Labor Day. That's when the hammer can fall. So we're really gearing up in our office to automate everything we can automate because, I mean, I already have almost 300 open matters. That may go to 1,000 by the time this thing gets lit up. So I don't think you're going to see when I say the hammer fall, what I mean is the bank levies go out, where you go onto your Bank of America app and your account is zero because IRS levy just cleaned it out. All right, where you suddenly find out your employer is not paying you anymore, where your vendors call you and say, yeah, we got this levy, I got to start sending them all the money. All right, and now people start scrambling trying to deal with it.
For small business owners, is there any difference that they should be thinking about? So like obviously you're an LLC, you know, you've got 20 employees. your business return flows through to your personal. There's, you might have LLC liability isolation for some things, but like you said, not payroll tax, not sales tax. That's going to flow to you personally. So can you isolate the difference, if there is any, an impact of, say, PPP funds, which that money started flowing, a little over a month ago, and knowing we got 26-week windows for forgiveness and how that timing could impact versus just straight up personal stimulus checks that might hit people's accounts?
Here's what I'm going to tell you. LLC S Corp. I mean, Mike. Here's what I'm going to tell you and everyone listening to this. And for those of you who are accountants who have clients, we're in this lull. All right. What I would tell you is it's like the deep breath before the plunge, right? We know it's coming. We know the storm is coming. We can see it on the horizon. Don't wait. All right. So here's what I would tell anyone who called me and said, Eric, I got this back tax debt, whatever. Here's the thing. The first and foremost, pay your current taxes. So if it's a payroll issue, we're in first quarter, right? 2021. Forget about the back. Don't worry about the back. We can deal with the back. Deal with the here and now, because if you're not in compliance, you don't even get a deal. So the first thing is pay January, February. Make your payroll deposits. Make sure you get your first quarter 2021 estimated tax payment in. If you're an employee, make sure you're having enough withholding. Done. First, let's deal with our compliance. Any missing returns for the last 6 years? Let's get those in. Once we're in compliance, we have this back tax debt, no problem. We can deal with that. It might be an installment agreement, maybe uncollectible, and get into the government now. All right, get in now, and just that way you don't have to worry. Listen, I got to tell you something. And Mike, you and I talked about this before. We were talking last week. If the hammer is going to fall, somebody's been ignoring somebody, and it's usually the taxpayer who's been ignoring the government.
Yeah.
All right. And so the point of a levy is to get your attention. I would be urging my clients, and again, and I'm talking to the accountants now, if you're interested in building this aspect of your practice, to send out a letter now to your clients, say, I know it's tax season. I know everyone thinks we're too busy, and we probably are, but over the summer we can get to this. If you can't pay your taxes, let's get in and deal with it, right? Because you don't want to deal with it when they've wiped out your bank account, all right? And now you can't get into compliance. You can't afford to hire us, all of the rest. So first of all, to deal with this bucket, Mike, so we, because of time, I don't think there's going to be any mass levy. In fact, I know there won't be any mass levy action due to the stimulus money. That is going to come to an end. Enforcement is going to pick up. Now, those last 2 bullet points, there are exceptions to this. If the IRS is going to lose a statute, meaning that 10-year statute, if there are years, or if there's a year or years where that is going to lapse while we're in this holding pattern, they have informed the IRS, the IRS collection field force, the revenue officers, and they've informed Department of Justice to go forward anyway. So what they do is they'll file suit and convert the liens into a judgment. And now they've got a 20-year judgment, so they aren't going to lose those years. So though they are not taking levy action, there are some exceptions to that. One is they will file the notices of lien and convert them to judgments if they're going to lose the statute. And 2, if they get a sense that people are transferring away assets to frustrate collection, in those cases, they are allowing revenue officers to go ahead and levy anyway. I have a case in our office where they just levied the person. And what they said is they noticed he quit claiming the house. And the revenue officer said, yeah, well, if we're going to now play cat and mouse, we got to move now. And they're going to get permission to do that, right? But the net of this, Mike, before we move on, there's going to be no mass levy action, but it's an opportunity for people to clean this up and get in before they end up having to be, I don't want to say victims, but before they end up having to deal with the enforcement.
Yeah, you know what? The recurring theme here is don't ostrich up, right? Be as proactive as you can. Don't think silence is acceptance over this last year. Silence is a holding pattern before eventually a hammer is going to drop. So be proactive. Let's jump to our next bucket. So let's talk abatements, right? So I guess first, let's assume that the majority of today's listeners haven't had to face these challenges. They do pay their taxes on time, and they haven't had to face abatements or even know what they are. So let's just get a quick definition of abatements, and then what that process would look like to request them, and likelihood to receive, and such.
Yeah, no, I mean, what an abatement is where you go to the government and you request that they abate or forgive the penalties. Now, there's a real misunderstanding around this where people watch those late night commercials like, oh, you can just call and get rid of the penalties. It actually doesn't work that way. The government, let me give you an example, right? I pay a lot of taxes quarterly because I'm self-employed and I have to. My partners, we all do. I'd really rather not, to be honest with you. I'd rather not pay my taxes, right? So in a global sense, when clients are whining about the penalties, here's what I would explain to them. I'd like to not pay. I do tell this to people. I'd like to not pay my taxes, and I pay a lot of taxes. Why should I? If there's no penalty, why should anybody? Why don't I just not pay and wait to see if the government catches up with me? Right? First of all, there's got to be some incentive for people to follow the rules. A. B. There's also a cost to this. Those revenue officers that have to come out and pursue you, well, they cost money. Why should I and Mike and everybody else here who pays their taxes, why should we bear that cost? Let the people that didn't pay bear it. Let the people that filed returns that weren't accurate pay it, right? So there's also the aspect of reimbursing the government for the cost of enforcement. Shouldn't the people that aren't playing by the rules pick up the tab, right? So from a global sense, you're going to call the IRS. You're not going to get a lot of sympathy on the other side. However, there are some plans, and there is a program called first-time abatement, and then there's also reasonable cause. So let's just deal with first-time abatement. For failure to file or failure to pay, it does not apply to the accuracy penalties. But if it's simply a failure to file or failure to pay, a taxpayer can get a first-time abatement if they have not been penalized for the 3 years prior. So let's say 19, they ended up with a balance. If they were not penalized for 18, 17, or 16, they can make a phone call and right over the phone get first-time abatement, all right, which is a great program. Here's what you have to understand. It only abates the penalty that has accrued up to that moment. Meaning, if I'm going to be in a payment plan, I can get an abatement as of today, but every other month that keeps going, that 0.5% for failure to pay penalty will continue accruing. So on the one hand, you're better off waiting to the end, right, when you can get the most bang for your buck. However, you can only get a refund for 2 years after the payment. So there's a bit of a timing aspect here that you want to look at if you're going to request the first-time abatement. Now, if it's a failure to file and you get the return in, well, then that's easy. You call up and request the abatement. If you get the first time, the whole penalty goes away. The failure to pay gets a little trickier because of the window of time. Now, the global one, where if you don't qualify for first time, is do you have reasonable cause? And let me tell you how difficult reasonable cause is. You need to explain to the government why you were incapable of filing on time or paying on time. Okay? So, and by the way, that's a big threshold to get over. All right? Money got tight. Not an excuse. You're supposed to pay the taxes as you earn them. Okay? It's more of, I had a medical emergency. My records were destroyed, and by the time we reconstructed them, they were late, right? So when it comes to reasonable cause, it's really facts and circumstances driven, but here's what I'll tell you, having done this for 23 years. Short and intense is good. That something happened, it was short-lived, 1, 2, 3 years, and very intense. We were good before, now we're good since. That's a good case. Long and drawn out, they haven't paid on time for 3, 4, 5, 6 years. the longer and more drawn out this is, what happens from the government's side is, well, wait a minute. It seems like year after year, they just can't be bothered, right? And what they'll actually say to you is, gee, Mike, they paid their mortgage on time. They paid their credit card on time. They put their kids through college and filled out FAFSA forms. So it's not that they couldn't file and couldn't pay. They just didn't feel like filing and paying when it came to their taxes. So as far as your abatement, yeah, no. All right. And that's the kind of picture the government's going to look at. So when we do these cases, before we move on, when we do these cases, if there's a medical issue, get me the medical documentation. Let's build a picture. First of all, by the way, they deny it. They always deny it. And when they deny it, we're going to go to appeals. So just know they're going to deny it and you're going to appeals. But when you get to appeals, I need to paint for that appeals officer the chaos going on in this taxpayer's life. What went wrong? They were embezzled. The records destroyed. Hurricane Sandy. I had literally a client whose house was photographed floating in Long Island Sound. I mean, there are things, listen, life happens. And the government does understand that. But these people who show up, yeah, I didn't file for 5 or 6 years, couldn't be bothered. Now I want penalty abatement. No, not going to happen.
Hey, Eric, just to set expectations. I mean, I feel like I know the answer, but I think maybe a question that could be going through, listeners' mind. How much? So maybe they do. They're in the prior category. They do pay their taxes on time every year and have always. They've never had an issue. In COVID, just simply crushed them. Is decline in business because of COVID? It's too early to even know. I suspect the cases probably haven't even been filed, but what's the likelihood of that being a viable case for reasonable cause?
I think it's an excellent one. And again, Mike, you just hit the nail on the head. This is someone with a great history, right? A good history. We have a legitimate rationale that everyone knows about, right? I mean, I don't think there's anyone at the IRS that would tell you, yeah, no, COVID, yeah, I don't know what that is. Of course they know what it is. So first, you may even get first-time abatement, but certainly, I think there's reasonable cause. But again, I would, and before we move on, here's what I'm going to suggest. You don't just throw it in and say, oh yeah, because of coronavirus. If you're in my office, here's what I'm doing. Show me the bank deposits, the P&L by month. I want to show the government the drop off, the plummeting. You let people go if you had to. You tried to get a PPP loan. In essence, my client tried to be reasonable. They tried to do everything reasonable. They tried to keep their employees if they could. They applied for loans. They possibly sold liquidated their own assets. That this client, this wasn't, Mike, this wasn't because of negligence or reckless disregard. They were suffering. They did everything they could. This is what happened. I think that is a very sellable, fact pattern to a reasonable appeals officer, that we know what happened. Yeah, I can see the numbers fell. I see the falling out of compliance. And by the way, we've now gotten back into compliance. And that's a big one, is you have to say, this is what happened, this is what we did, and now we're back in compliance. Because if there's an ongoing non-compliance, the IRS is going to say, well, what do you want us to do? I mean, at some point, you have to take a hard look at this business. Is it even viable anymore? And now that's a whole different program. But with automation and everything else, is the virus now going to literally permanently shift some entire industries? What people poo-pooed before, we now know is, doable, via, Zoom or whatever. But one of the things is, we can show the dip, we can explain it. It's really the response that the government is looking to. Was it reasonable what this person did? Or is this just an ongoing problem where they're just not paying us?
So the purpose of this webinar series is to help small business owners get knowledge and get the facts to understand, so they can be better business people I think now survive, but then eventually grow their businesses. I think the message here is be proactive, pay your taxes, do it. If you can't, you get proactive. There are courses of action you can take, whether it's the FTA or reasonable cause but before just to prevent any hate mail, an abatement is not a get out of jail free card. You don't have to pay your taxes because you had bad luck. It is an abatement only on the penalties. You're still always going to owe the money, right? Anything
Right.
else you want to clarify here before we move on to the next topic?
No, I mean, if there's a problem with the underlying liability, there are different ways to address that. Audit reconsideration, amended returns, doubt as to liability offers, whatever. Yeah, no, this is an abatement issue. Now, when it comes to and people are going to ask this, when it comes to the interest follows the tax. So if the abatement, if the penalties get abated, the interest attached to that goes away. The interest associated with the underlying tax, that is statutory. The IRS has no authority to abate it, so that would remain.
Yeah. Okay, very good. Last topic here, let's jump in. Are there trust fund issues for payroll taxes?
Yes, and hence remember that comment: pay the sales tax, pay the withholding tax. What happens is those are taxes that we refer to as quote unquote trust taxes, meaning you've collected it and you're holding it in trust for the government. All right. Now, this is a hot button issue with both federal and state enforcement. And the reason being, I mean, think about it. You've collected money from unsuspecting taxpayers. Well, they're suspecting, they know you're collecting it, you know, the sales tax is on the receipt or whatever. But you've collected this money. For you to now go and basically steal it, and that's the way they view it, is not tolerable. Okay, so this is a hot button issue both for civil and criminal enforcement. Okay, so in fact, there's an interview, there's a video on my bio page of Caroline Cirolo, who at the time was the acting assistant attorney general for the Department of Justice Tax Division, and me. She's since left the government. She's now a partner at Castellanos and Fink in Washington. But Caroline, it's about 13 minutes where she basically came out and said the collection of payroll taxes or withholding of payroll taxes and failure to pay it over is nothing short of fraud as far as they're concerned. You've effectively stolen money that does not belong to you. All right. So one is it's an enforcement priority. Two, there is personal liability that goes along with it. So, you know, your business, right? This law firm that where I'm sitting right now, it's an asset that I own, no different than any other asset, a stock, a bond, anything else. The difference is that this asset with the payroll taxes has the potential for destroying all of my other assets, right? If you have a bad stock and the stock goes to nothing, you lost the money you had invested in it. This is an investment that not only will this go down the toilet, but it'll drag all my other assets with it from the personal liability. So what my final thoughts are when it comes to this is know that there's personal liability. And a lot of entrepreneurs I see and a lot of business people fall into a trap of relying on their bookkeeper or relying on their in-house accountant who is going to begin doing this. They're going to begin paying whatever the most pressing bill is. It might be the rent, it might be the vendors, it might whatever, just to keep it going. Bad idea, really bad idea. All right. The sales tax and the withholding tax must get paid. Here's why. If worse comes to worse and you have to pull the plug, at least you can walk away from it and move on to your next venture. With sales tax and withholding tax, I have people who for years later are in a battle with the government, payment plans, trying to do offers in compromise, and you can compromise it, right? It's very difficult to do on an open business. We've done it. The government doesn't like it, but you can. But net, there's personal liability here and potential criminal. If they really view it as criminal, what makes the civil case go criminal is usually a lifestyle analysis, meaning the taxpayer, you know, most people when their businesses fail, they're also personally not in a good position, right? I mean, the government doesn't make everything criminal, right? You invested, you lost, yet the government didn't get paid, okay. But the ones where they go criminal are where the business fails owing the payroll tax, but the owners, They got plenty of assets. I had one that had an apartment in New York, a house in Florida, a house in Cape Cod, a Bentley, and a boat. All right, he got 30 months in federal prison. All right, for owing $2 million in payroll taxes. And what the government basically said is, it's not that they couldn't pay, they just didn't feel like it.
Yeah, and I feel like payroll is such a trap for people, right? So of the two buckets, sales tax versus payroll, I mean, presumably sales tax coincides with a cash inflow, right? So somebody paid me $100, 5 of that was tax, okay, $5 goes in one pocket to pay the taxes, and 95 goes in my pocket to pay my bills, in the other pocket. But payroll is just psychologically, perhaps for many small business owners, viewed as an expense. And boy, if I just withhold, and I'm not having to pay that as though it's a bill, the employer side of the tax equation, the employee is paid theirs, right? That deduction came out of their check. They didn't have a choice about it. So that's the employee paid theirs. But because it feels to many people, I think, like a bill that they can save up for, my sense is that's where the trap is for so many entrepreneurs starting out who are cash strapped, and just, man, can't emphasize hard enough that you can't grow a business if it's padlocked in the front door, right? You just have to be compliant. Eric, this has been a really good conversation. Any other closing remarks you want to share with everybody?
Look, I mean, here are sort of my final thoughts on this. There are opportunities to resolve your issues. All right. IRS has lots of opportunity, whether it's just rolling in or it's setting up a new agreement, even an offer in compromise. Two critical things. One, you need to be proactive, and you want to get professional help doing it. The other thing, and this is this final point, is be aware that when it comes to liabilities for a business, sales tax and payroll taxes carry with them personal liability for the owner and the officers, potentially, who had signature authority and functional authority over the finances. So those are two expenses that I would urge you to treat differently and make a priority. Even if you're in a wind down, if those can get paid, there's a good shot you may be able to walk away, move on, get on to the next successful venture, and not have this anchor dragging along with you.
Eric, I really appreciate your time. And I just want to thank everybody else for joining us today. So Assure is in the business of providing human capital management. That's payroll, HR, time and attendance, HR services, to help companies stay compliant, to save money, and then grow their businesses. Obviously, this last year has been had an awful lot to do with compliance and an awful lot to do with survival. And as we see light at the end of the tunnel here with the vaccine and the numbers coming down on a daily basis, I don't think anybody of us is smart enough to know the exact day, but it's pretty clear things are going to be opening back up. It's never going to be the same world post-COVID as it was pre-COVID, but there's plenty of reason to be optimistic, and we want to be a partner for you. And I just want to thank Eric. Look forward to more future conversations with Eric. Tremendous knowledge in this area. I would encourage people to follow Eric and download his podcast, the Tax Rep Network podcast. I'm sure you can Google it and find it. We'll provide an opportunity for contact information. For Eric's sake, it'd be great, but hopefully for your sake, you don't need Eric's services. That you're in a good position. If you're an Assure client, we're taking care of the taxes for you. You sure don't. If you're not an Assure client and you have trouble, seek Eric's help, and we would love to partner with you in the future to avoid any potential problems in the future. And with that, Eric, thank you so much, and thanks everybody for joining us today.
Thank you for having me, and thank you for joining us.